Hello my friends and welcome back. Thank you very much for being with me again today. I don't think this article will bring good news, but at least the so-called Federal Reserve Bank, a private bank, will increase its rates. And I know that that's not good. So when that has to happen, that means something very bad is occurring in the economy. So let's see what's going on here. This article comes from Reuters and it is from October 24th, 2022. Federal Reserve Bank, to hike by 75 base points again on November 2nd, should pause when inflation halves. Oh, let's see. The US Federal Reserve will go for its fourth consecutive 75 basis points interest rate hike on November 2nd, according to economists polled by Reuters, who said the central bank should not pause until inflation falls to around half its current level. Good luck with that. Its most aggressive tightening cycle in decades has brought with it ever bigger recession risks. The survey also showed a median 65% probability of one within a year, up from 45%. Still, a strong majority of economists, 86 of 90, predicted policymakers would hike the federal funds rate by 3/4 of a percentage point to 3.75% to 4% next week, as inflation remains high and unemployment is near pre-pandemic lows. I don't understand how these guys say that unemployment is low. And I tell you why. I go shopping and I'm very much involved in certain kind of activities where I know how many people show up and how many people do not show up, how many people have jobs and how many people don't have jobs. And I can tell you that people are not working. That's one thing. The other one, I know that when they make these statistics and they come with data, they consider people who are not looking, don't receive services anymore, don't receive money from the government, let's put it this way, nicely and straight, handouts, however you want to call them. They're out of that, and when they are not looking for jobs, they're out of the data, so they are not considered. So are considered only the ones who are looking for jobs, not the ones that say, oh screw it, I'm not looking for a job. So results in the polls are in line with interest rates future prices. Only 4 respondents predicted a 50 basis point move. The rest are 75. And I'm quoting, the front loading of policy rate tightening we have seen up to now has been aimed at getting to a positive real Fed funds rate at the start of 2023. So a majority of economists in the October 17 to 24 poll forecast another 50 basis points hike in December, taking the funds rate to 4.25% to 4.50% by the end of 2022. That's not good. The funds rate was expected to peak at 4.5% to 4.75% or higher in the first quarter in 2023, according to 49 of 80 economists. Well, asked around what level of sustained inflation the Fed should consider pushing, currently running above 8% accounting to the Consumer Price Index, CPI, the median from 22 respondents said 4.5% according to that measure. CPI inflation was not expected to have until the second quarter of 2023, according to the poll, averaging 8.1% 3.9% and 2.5% in 2022 and 2023 and 2024 respectively. So we're gonna in 8.1 in 2021, the CPI inflation. Supposedly in 2023 we're gonna have 3.9. I don't believe that a bit. And supposedly the 2.5% will be in 2024. I don't think so. Anyway, if they know what they're talking about, right? Next year, the economy was expected to expand just 0.4%. A forecast that has been downgraded in each consecutive monthly Reuters poll since the Fed first started hiking in March after growing 1.7% on average this year. The unemployment rate was expected to average 3.7% this year before rising to 4.4% and 4.8% in 2023 and 2024 respectively. An upgrade from the previous poll, but significantly lower than the highs seen in previous recessions. Still, the chance of a sharp rise in unemployment in the United States over the coming year were high, according to over half of respondents to an additional question, 23 of 41. 18 said the chances were low. This is what they say, and I don't really have much faith in this Economist, because the Economist, unfortunately, they, you can try to figure out the future more or less, but then you don't know. There's so much regulation in the market that you really don't know how one little policy affects another policy. Therefore, you can say, okay, if the market works normal, this should be probably the outcome. But then how do you know it's going to act? Because so much regulation will hit certain kind of areas where it's unpredictable. And the fact that the Fed comes in and adjusts the rates and all that, yes, it could interfere in a certain way with this area, but can harm the other one. And once you start regulating stuff, it's hard to figure out what's not going to be compatible with what. That's what happens, for instance, in a program. Let's say you have a program, wherever you work, and you make a change here. You make a change in a program here and say, yeah, that's a good one. That's going to affect this area. But then that thing is going to affect that one that you're really going to help. But that we're going to affect something else that's going to destroy. I don't believe a bit that the unemployment rate is 3 point whatever they said over there. I don't believe it, and I tell you why. I go and buy things every day, or almost every day, and it's enough for me to go and look. For instance, let's say I'm going to buy groceries, and let's say I go to a store called Kroger's, and these Kroger's have about 15 cashiers, 15, and then 2 where you do it yourself. You pay using your click, clack, clack, clack. Now from all those, let's say 15, I would say 15, or 15, maybe 3 are open. You don't see more than 3 open. And you see lines, long lines. So what does that tell you? They want to save money somewhere? No, because the price of the product is increased. There's no people wanting to work. You see people pushing carts outside. Not there. Always is we hire. And you look at the prices. I drove by an Aldi warehouse. Aldi, I think is German company. It a big warehouse with 50 docks for trucks, whatever. You see it from the freeway. And I remember it was about a year and a half ago. It was $14 an hour starting at, and now it's 20 to 20. How much it was? 20 to 24 or 26. Now, how is it that much? Because people don't come to work. So then you increase the pay and you hope that people will come. So it was about minimum $7 just rose in about a year as an offer to come and work in a warehouse with a forklift and stocking shit. And they tell me it's only 3 point pre-pandemic. I don't believe that a bit. But anyway, I just read what they say, and I'm telling you what I observe in real life. And as I said, I have a lot of contacts with a lot of people and have conversation on, on jobs and how many employees and all that. They all scramble to get employees. There's no employees. They say there's no one to work. You can't hire. Anyway, maybe we live into alternate realities here. Those guys and us. Thank you very much for being with me again today. Stay strong, stay smart, look for the truth, and be just.